Hi, it's Sue here from Scott Properties Group. We have the pleasure of having Ian Robinson with us again to discuss another topic that is really relevant, and that is how are banks assessing investment applications for investors. Ian is based on the Sunshinecoast in Currimundi and Noosaville, so he has a very large area that he covers. So Ian, how is this all panning out with these applications?
Okay, well, it's an interesting one for investors. Investors were pretty much made the scapegoats following the enormous rise in prices in the Sydney and Melbourne markets 2 or 3 years ago, and they were blamed pretty much for locking other people out of the home loan market, in particular first home buyers. And so APRA, the regulators, stepped in and they said to the banks, from now on, we want you to cut down on the number of investment loans that you're doing in order to slow the market down a little bit. And the only way that banks could really do that was through either raising rates for investors or changing the amount of deposit investors needed. And unfortunately, they did the both. So investors now are paying probably 0.3 to 0.7, sometimes more of a percent over owner occupiers. So it's a little bit dearer for them nowadays. And they're also required to show a little bit more deposit than they usually would. And some banks, depending on who they are even asking for a full 20% deposit off investors now.
When before it was
you could do it on as little as 5. Yeah.
So it's a big change.
It's a big change. And the other thing as well is investors who are on current interest-only facilities and they're coming up to expiry, a lot of lenders won't renew them anymore because they can only have up to 5 years interest only, for example, and so they have to either bite the bullet, the investors, and either refinance or change to principal and interest.
So if they refinance, are they able then to look at interest-free payment again?
Yes, so most banks will take a new customer on with an initial 5 years interest only is the normal. You can go longer with some banks.
I meant interest only, not interest-free. Sorry about that, folks.
That would be
You're
lovely.
not getting anything interest-free.
That would be lovely. And the other thing as well with investors, of course, those people who are your overseas buyers, non-residents, actually have to face that additional impost of the 7% tax for buying properties here in Australia.
And still have to go through FIRB.
And still have to go through FIRB and buy brand new or recently built.
Yeah. And I also heard or I'm aware that if a property has been virtually demolished and rebuilt, that also classifies under FIRB as well.
That's also classified under FIRB, and also for first home buyers as well, they can still claim the grant for that.
Yeah, that's excellent. Great, thank you. So, thanks Ian. That's a great information for us all. I think the most important thing is to probably ensure that you just always speak with a mortgage broker before you do anything. These guys have everything to hand, and no two people are the same. So no one size certainly does not fit all, does it? So we're going to be catching up with Ian again in a couple of weeks' time, and on a topic of the 3 best tips to provide for people looking to purchase property in 2019. So thank you again, Ian. It's a pleasure being with you again, and bye for now.
Thank you. Bye.